Hey friends, it's Tuesday, September the 6th, and another red day for the market. No change. The market averages were down, so there's no change to our model. The small cap index was down 0.9% today. NASDAQ down 0.7%. Standard & Poor's down 0.4%. And Toronto was down about 1%. So not a cheery day, although it did start off high, but then deteriorated throughout the day. So let's look and see what the charts did. So here's the Standard & Poor's, and another red day. We're at a really key level here. If we draw a line across here, actually across here, sorry. What this area here, the 3900 area in the SPY, was resistance. Couldn't get through, finally broke through. And there's a concept called what was resistance now becomes support. And sure enough, it broke through, came back and tested the 3900 level, and then ran higher. And now we've come back. We tested it on last Thursday. We tested it again Friday. We tested it again today, but didn't break through. That's the good news. So hopefully, hope is not a proper term for trading, but nevertheless, we're hoping it will come back up this way. But if we do take out this low, then down here around 3,700, another 5% drop is entirely quite likely. So not looking great. The weekly chart doesn't show any better. I'm going to digress for just a second. I'm going to try and keep this short because it is later in the evening. I use what's called bar charts, and just to give an explanation, a little bit more explanation of how these bars work. When the little wiggle on the left, you can see it here and here and here, that's where the stock opens in the morning, and the one on the right is where it closes. So you can learn a lot from analyzing these bars. As an example, this day here, we opened down here and we closed right near the high, right at the 200 moving average. And then the next day, it opened right where it closed the previous day, but then whooshed down and closed at the very low. Now, this is not a good sign whatsoever. Notwithstanding the fact it took out all of this, but a stock close or an index closing at the very low usually means that the next day it's going to go lower. And sure enough, it did. It gapped down, it opened down here, and it basically closed where it opened. So you could say, okay, that's a little pause. There's equilibrium between buyers and sellers. The next morning, it opened up, and then just went straight down and closed right near the lows. Again, not a good scenario. The next day, the same thing. It opened up slightly, suckered in a few retail buyers, and the institution started selling, and we closed right near the lows. So that would have been last Wednesday. Thursday, we opened down, went down even further, and then ripped back up and closed right near the highs. So you would expect this could be sort of a bullish sign, and that maybe this move might be over. And in fact, on Friday morning, the market opened, it gapped up, it opened up here, suckered a lot of people in thinking, okay, we're going to rip right back up. We've put in the lows. And then what happened? The institution started selling, and wham, Friday was a nasty day, closing right near the low. And today was no different. We opened up, went up a little bit higher, sucked a few people in, and then closed right near the lows. This shows up a little bit better on a 15-minute chart, which I can't seem to. Okay, I can't show it. I can't drag it onto the screen for now, so I won't be able to show you that. So there's not really, from an index perspective, sector perspective, there's still nothing, there's nothing to do. Now I did this morning I got pretty aggressive. I opened 4 new positions. I was planning on selling most of the positions if they held up near the end of the day, but I got called off to a golf game unexpectedly. And so I'm left with more open positions. I now have like 8. I went from a 82% cash to now I'm 81% invested. So that's a big swing in one day. But fortunately, at least so far, I got my fingers crossed. The stocks have held up well, and barring a big gap down tomorrow, I should be okay. The first was 3 of these were off my 10 stocks to watch list that I posted on the weekend. The first was this Arch or Alliance Resources, the coal stock, and you can see if I draw the downtrend line here, it broke it today. It went through there, and it actually held on to most of its gains during the day. I'm in it right, pretty much where it closed, right at $26. So notwithstanding a weekday, this one's holding up reasonably okay. The second was symbol ASAI, and the same thing. This one is really holding up very well with the market going down. This one now has 1, 2, 3, 4 days of higher lows. And if it breaks, I'll add to this position if it takes out 1867. You're looking at the weekly chart, this will be setting new all-time highs. So that one held up pretty well. Next is Enphase, the solar company. And again, this broke the this downtrend line here. So sort of an aggressive entry. I got it in around here somewhere, 284. I took a quarter of my position off around 296, but I still have 3/4 of my position. And again, this one held up very, very well in all the market carnage today. So I'm happy about that. And then the fourth position I opened was EVH, the healthcare company. And it didn't really do much. It's I'm up slightly. I think I'm in at 36 and 36.70, something like that. But again, it's posting higher lows while the market is posting lower lows. So it's showing great relative strength. So I got my fingers crossed for tomorrow. I'm more exposed than I probably should be, but we'll see what happens tomorrow. So that's it. That's all for tonight. Sorry, this is very short, but it's kind of late in the afternoon or evening, and we'll talk to you tomorrow.